That's Samsung and LG LED TV in your house. Do you know who makes them? And do you know that this manufacturer is a listed company that has generated 18x returns in 5 years? Presenting to you Dixon Technologies. These guys make LED TVs, semi-automatic washing machines, lighting products and even mobile phones for all the top brands in India. And the company has been consistently delivering good returns to investors. In the past 6 months, there's been a 29% increase in stock price, while in last 1 year, the stock has gone up by 187%. Let me tell you more about this company. Dixon made its humble beginnings in 1994 by manufacturing color TVs. Then came LED TVs, washing machine and LED lighting. Now, the company has expanded into manufacturing mobiles and IT hardware, telecom hearables and wearables. Dixon has two segments. One is where they simply manufacture for other brands. The other segment is the more lucrative segment wherein Dixon designs and develops products from scratch for other brands, for example, washing machines. Dixon is the Rajnikant in its business. No one else dares to go up against them. Dixon's 3-point mantra for success would be 1. Where they enter a category, say mobile phones, they'll make every single tiny part themselves. They will not outsource it, and this means that they are able to provide cost-effective solution for their customers. Number 2, why does Dixon have almost no competition? Because they have wafer-thin margins of almost 4 to 5%. Who can compete in such a cutthroat segment? Number 3, customers tend to stick to Dixon. Existing customers are giving them more work, and the company is also adding more and more new clients like Xiaomi, Samsung, Cisco, Lenovo and Flipkart. The 3-point mantra has been paying off. Dixon has increased revenues at a compounded annual growth rate of 32% over the past decade. Dixon has been championing the government's Atmanirbhar Bharat initiative and is a proud recipient of approval under 5 PLI schemes, mainly in mobile, IT hardware, telecom, lighting and air conditioners. Dixon is likely to do even better in near future because they are focusing on mobiles. The company has created an annual capacity of 30 million smartphones and 50 million feature phones across 4 plants in Noida. They have a big order from Motorola, of which a significant part will be exported. There are other large new brands in pipeline as well. It's not just us who like Dixon Technologies. HDFC Securities too has picked up the stock and stated that Dixon's mobile and EMS segment will be the next key growth driver. They see the segment growing at 75% CAGR between financial years 2023 and 2026. The next big growth driver for Dixon is laptops and tablets. Dixon's 100% subsidiary Paget is now a beneficiary under the IT hardware PLI 2.0. PLI is production-linked incentive scheme offered by Government of India to encourage domestic production across sectors. Under the scheme, Dixon will invest 250 crore rupees during the tenure of this deal, and in return, government will give incentives on incremental sales. Dixon has already finalized business with Lenovo for manufacturing of notebooks and tablets. Asus is also in talks with them. Do you know 10% of India's small and medium refrigerators can be manufactured by Dixon alone? The company has the capacity to make 1.2 million direct cool refrigerators in the category of 190 and 225 liters. This covers 10% of the market. Of course, there's no company or stock without an element of risk. The key risk we see for this stock is competition from global companies that make IT hardware and wearables setting up shop in India. Dixon could also lose business if established brands decide to manufacture in-house. If demand falls, the company could face delays in orders from clients. Now, talking about the valuation, currently the stock is trading at 144 PE. If you look at last 3 years PE ratio, it has remained above 100x mark. So the premium valuation is on the back of market participants seeing this as a high growth company. Now, this has to be seen whether this growth will sustain or not. For more such updates, stay tuned to NDTV Profit.